So today, on our second panel, we have the Parliamentary Budget Officer, Yves Giroux, and he is with an advisor analyst, Jason Stanton. So welcome, Mr. Giroux, and you know this committee well. You have the floor for your statement. Thank you, honorable senators. Thank you very much for having invited me to be here today. We are pleased to be here today. I'm sincere. It's as part of your study of Bill C-78 on the temporary relief of the cost of living. I am here today with Jason Stanton, an advisor and analyst, who has worked on this issue in the past and is still working on this issue. Bill C-78 modifies the excise tax in order to put into effect a temporary GST and HST relief between the 14th of December and the 15th of February. And the list of exempt products are restaurant meals, children's clothing, and something that I care about a lot, chips. And as we know that this will reduce tax income by $1.5 billion for the current tax exercise. I will continue in English.
The potential impact of Bill C-78 on federal compensation to provincial governments that collect the harmonized sales tax under their respective comprehensive integrated tax coordination agreements, that is Ontario, Newfoundland and Labrador, Prince Edward Island, Nova Scotia, and New Brunswick. If these provinces do not waive the compensation required under these agreements, we estimate that the federal cost would increase by an additional $1.3 billion. Jason and I would be pleased to respond to any questions you may have regarding our cost estimate of Bill C-78. Thank you.
Merci beaucoup.
Thank you very much, Mr. Giroux. So let's begin the round of questions. Senator Forêt, you have the floor. Thank you, Chair, and thank you very much for being here. I don't have any chips for you to go with my question, but when it comes to the temporary tax holiday, will it have a short-term inflationary impact? Mr. Charlebois gave an example, and it is that when the GST went from 7 to 6 and then 6 to 5 in 2008, that the inflation rose afterwards. And so do you think that the measure that we are studying here could have the reverse effect? And so it would make things even more expensive after the relief ends? Answer: we did not actually examine the issue in a very fine-tuned econometric way, but I can say that it is an inventory of lists that is fairly limited. And so if there were an inflationary effect based on increased spending or increased economic activity, well, it would be temporary by definition, but it would also be counterbalanced by the GST decrease for those products. So I don't think that there is an undeniable inflationary effect of the measure. When it comes to the government's plan, the $250 checks, the impact of that is easier to determine in terms of the qualitative effects, or quantitative effects rather. But when it comes to the reduced GST, it's less clear to me. Question. So what we heard from the minister yesterday, the objective, and we have to believe that that is her objective, is to make sure that Canadians have more money in their pockets after the holidays. But what I find it paradoxical, because in order to get more money in their pockets after the holidays, they have to spend more during the holidays. And it's sort of like what happened with municipalities. In order to get infrastructure monies, they had to spend more so that they could actually get the money. So I think that it is inconsistent. And do you agree? Answer. I see your point of view, but insofar as consumers like us will have to be spending money during the holidays in order to purchase a number of goods, that will create savings for them. They will have more money left afterwards for people who were planning to buy alcohol or go to a restaurant anyway during the holidays. So yes, they are going to end up with more money after the spending that they were expecting to have anyway. But if somebody wanted to maximize the value of the GST relief by spending a great deal, well, then in that scenario, it is counterproductive. Do I still have time left? No, you do not. That was a clear answer to your question, Senator Smith. Thank you. Hello, Mr. Giroux. Welcome.
Defense yesterday of Bill C-78, the finance minister, in response to criticism that short-term measures like this only exacerbate long-term issues, the minister told our committee that the government has a broad fiscal strategy which prioritizes growth and productivity. She pointed to initiatives like clean energy investments as one example. Just wondering if you could comment, given your role of analyzing government fiscal policies, do you feel that the government's broader fiscal policies are in fact working to increase productivity in the long run, and does Bill C-78 negatively impact that long-term goal?
Well, I don't see Bill C-78 as being an instrument that will increase productivity. It's quite clearly geared towards consumption. And it is the stated goal to make life more affordable for Canadians in their consumption expenditure. So it doesn't do anything to enhance productivity. And it has a cost of an estimated $1.5 billion plus a potentially $1.3 billion additional if provinces do exercise their rights under the tax collection agreements. So it will add pressure on the federal government's finances to the tune of at least $1.5 billion and potentially $2.8 if provinces all seek the compensation they are entitled to under the tax collection agreements that are quite clear.
Can I ask a supplementary? Yes. Given that the public accounts for 2023 and 24 have not yet been tabled, leaving the Parliament without a clear understanding of the current deficit, how do you view the transparency and accountability of approving additional spending measures under Bill C-78? Is this delay a cause for concern when evaluating the government's fiscal position?
It is indeed a cause for concern because when we look back at history, aside from 2020, which was a pandemic year, and election years when elections were in the fall or late in the summer, this is the year of recent memory, at least, where the public accounts are tabled the latest and by a significant margin. So it puts you as legislators in the very uncomfortable position of approving spending through main estimates, supplementary estimates, and now specific measures without having an idea as to what was the deficit for the year that ended in March, which is it was 8 months ago, 8 months? Yeah, 8 months ago, more than 8 months ago, and we still collectively don't know what was the deficit for that year. So it is a cause for concern.
Thank you. Merci, Mr. President.
Merci, Senator Smith.
Thank you, Mr. Chair. Senator Lalfond, you have the floor. Thank you, Mr. Chair, and thank you, Mr. Giroux. I know that you're still making some calculations, but I'd like to ask you some questions to understand your figures. So you talked about a direct cost of $1.5 billion. Does that take into account the positive consequences of the measure? For example, the Restaurateurs Association of Canada said that their economists estimated that they would have $1.5 billion more in profits or in earnings. And so is that going to create more funds also for workers because people are going to be leaving tips? So really, we're talking about maybe as high as $300 million worth of tips, and that's not taxable. So what about, or that's taxable rather, the dependents. So what about people who will be working more? They'll be paying taxes on their income tax. I mean, what about all of that? Are we taking into account the positive side of the ledger? There will be an increase in consumption, and that will also create positive repercussions on taxes. and the taxes collected? That's an interesting question, and I think it has to do with what Senator Forêt was asking as well, to a certain extent. We considered that. And there's a practice in the United States that I was not aware of, where there are tax breaks for limited periods, for weekends, like tax-free weekends, for example. And the Federal Reserve looked at the impact of those tax holidays and saw that there was no increase in direct consumption. It made consumption move. So there was no real new economic activity. But what it was is that when people know that there's a tax holiday coming, they will postpone their purchases, and they will make their purchases during the tax break. And so people will buy a little bit more alcohol or more chips in my case during the tax break. So there is no real new economic activity. There's no significantly measurable new economic activity. So here, we've heard that there will also be a shift from groceries to the restaurant. But there is a difference, because you don't pay a tip at the grocery store, but you do at the restaurant. So it's not exactly the same thing as a tax holiday weekend that you described. So when you talk about the $1.3 billion, that's for the 5 provinces that have an agreement on tax collection with the federal government. So could we get a breakdown per province? Because yesterday, I think Senator Don was talking about $14 million for PEI. I think Senator Ross talked about $40 million or $60 million for New Brunswick. Is that right? $63 million for New Brunswick. Are those the figures that you found as well? Could we see the table of the breakdown per province? And then I have a question for the other 5 provinces, and particularly the 4. I think that will have to be some talks, but can we get the breakdown per province for the 5 I mentioned? Yes, so that we have the provinces that were mentioned, PEI and New Brunswick. We have the same figures pretty much for Ontario. Well, that's about $1 billion because of the size of the province. And for Nova Scotia, about $90 million, and for it's about $60 million for Newfoundland and Labrador. And Jason, I know, is not very comfortable with the figures that I'm giving, because they are estimates of data that are not perfect, and because the goods that are subject to tax relief are very specific, and we do not have that level of detail. But we do have it for Christmas trees. It's surprising, but not for some other goods. So we're talking about estimates here, and so when it comes to the magnitude, it works, but we don't have the specific data. Senator Dalphond, your turn is up. Senator Lafreda, you have the floor. Thank you, Mr. Chair. Thank you, Mr. Giroux.
It's always a treat to have you guys over. We had the treat of having Mr. Dodge with us, and I did ask the question. Many economists. BMO Economics is forecasting GDP increase from 1.7 to 2.5%. In Canada, we all know we need productivity. You did mention it's not a new economic activity. And he did say, I mentioned the question, why? Why are we not making a long-term investment and having a short-term investment, which is temporary? And I think just to defend a little bit the policy, I know you're not in policy, but to defend the policy, it's temporary. We're giving Canadians a break, a much-needed break, because we hear about food banks and homelessness, and we're giving them a break. And investments, he'd like to see a long-term investments, are permanent. He did say it's a bit of both, lack of creativity and lack of fiscal capacity. And I know you're the expert on fiscal capacity. So maybe you can mention a few words on that, and maybe the increase in GDP, is that realistic to have those projections, given your statement that no new economic activity is being created? It is being created in Q1, according to the economists.
It's quite possible that the Federal Reserve had it wrong when they estimated the potential economic impact of sales tax holidays in certain states, which is a measure that Jason brought to my attention. I was not aware that it existed, certainly not to the extent that it was sufficiently widespread for the Fed Reserve to study it. So it's quite possible that it will create new economic activity. It will be, however, in the sector of consumption. Some of the goods will be domestically produced. Some are imported. For example, game consoles like PlayStations and so on are not domestically produced. So, yes, there are some issues. Well, I hope you won't use it during my testimony in front of the Senate National Finance Committee, but you don't have to answer that. So all that to say, it's possible there'll be increased economic activity, but it's possible and likely, in fact, we believe that it will be a displacement of consumption expenditures. All that to say, the fiscal capacity is an important aspect. You asked me, what do I think about the fiscal capacity? We released a fiscal sustainability report in the summer that suggests that under current policy settings and demographic assumptions, fiscal position is sustainable in Canada, and the federal government could spend more or tax less or a combination of both and still remain sustainable over the next 75 years. So is there fiscal capacity to take on more investments? The answer is yes. Is it desirable? I'm not in the business of providing advice. And same thing, I'm not here to comment on the appropriateness of C-78.
Thank you very much. Much appreciated. Merci, Monsieur le Président.
Next,
Thank you, Mr. Chair.
Dr. McAdam.
Thank you for being here. Actually, most of my questions were already asked. I'm concerned about the tabling of the public accounts and also the impact on the provinces that have harmonized sales tax. And I think we've already talked about that a bit. But I do have one other question that maybe I can get your comments on. CPA Canada recently stated, the use of tax policy to achieve social objectives is nothing new. The temporary GST change places a heavy burden on businesses, especially small and medium-sized ones, without addressing the core cost of living challenges Canadians are facing. And we've heard this message echoed by some witnesses at committee as well. And I'm just wondering if you can comment on that, if you have any thoughts on that.
It's not something we have looked at, but it's clear that with the way that point-of-sale systems are set up, it will require reorganizing and recoding the point-of-sale systems for thousands of businesses. So it is a cost. I can't comment on the magnitude of that cost for each business, but yes, it is an issue, and others like CPA Canada and the Chambers of Commerce are in a much better position than us to comment on that specific aspect.
Okay, thank you.
Thank you, Senator McAdam. Senator Kingston.
Merci, Monsieur le Président.
Thank you, Mr. Chair.
I just wanted to say that storm chips and the concept of that were born in New Brunswick. So if you like chips, then storm chips in the winter are great. But my question has to do with the compensation piece. So I come from New Brunswick. There's already been a measure, I guess, put in place with the throne speech that would provide the equivalent of a rebate on HST for power bills. And at the time, because it had been a promise in an election platform, but the government stated that they were going to do it another way because of the negotiation that would have to take place with the federal government. So I'm just wondering, we talk about compensation, not actual, you're talking about apples and oranges possibly. So can you just tell me how these types of compensations had been dealt with in the past?
So I'm not aware that there was compensation paid in the past, except for initially joining the HST framework in provinces. I will say, though, that the Sitka, as we like to call them in public servants parlance, they have provisions that allow provinces to deviate the tax base, to have a different tax base by up to 5%. So there's flexibility to deviate by up to 5%, if my memory serves me well. In the case of New Brunswick, an exemption of power bills from HST, I don't know if that would be below or slightly above the 5% threshold. That's something that NB, New Brunswick officials and finance officials would be in a position to determine. On the changes that trigger compensation, the moment that the federal government initiates a change that would reduce provincial receipts by 1% or more, they have to provide compensation. Sitkas are quite clear, unless the province explicitly waive their right to get such a compensation. And in that case, the case of C-78, according to our calculations, it would be significantly, well, clearly above the 1% threshold in each of the 5 harmonized provinces.
Okay. Nassim, thank you very
Thank you,
much.
Senator Ross.
Thank you, Chair. Thank you both for being here today. I want to ask a question about the provincial portion of this enactment of this bill as well. First of all, could you confirm to me the number that you have for New Brunswick? I think I was the one that said the number. So what number do you have?
It's in the same ballpark. We have, I think it's, for New Brunswick, 70, so 62.
70.
62 is in the ballpark.
Okay.
So. I should say I was warned by Jason not to give a specific number, but given that you asked.
Since I asked you. You used the term provinces waiving their eligibility. In your opinion, is this something that would make sense for the provinces to do, or why would they do that?
That's a good question. Ontario leaving $1 billion on the table? It's possible. It's possible. I can't say why.
The agreement between New Brunswick and the federal government, and it's very clear that they either have to be consulted in advance or they're entitled to compensation if it's more than 1%.
Yeah.
I can't imagine why a government would leave that money.
It could be part of a discussion between different levels of government. At that point, it's federal-provincial relations dynamic, and I'm not under that tent, but what I can say is the agreements are quite clear.
Thank you. Thank you.
Thank you, Senator Ross. Senator Smegby, question?
Thank you. The PBO has costed the annual net cost of guaranteed livable income at about $3 billion. And we know that the temporary Bill C-78 measures combined with the one-time $250 check would have a price tag of more than $6 billion. So what long-term impact in terms of lifting those most in need out of poverty would you anticipate from the approaches taken in Bill C-78 versus a measure like guaranteed livable income?
Well, I think a GBI has a different perspective or objective than the GST HST break. So GST HST break is of general application, and generally speaking, the more you consume, the more you benefit from C-78. Whereas a GBI, it's quite the opposite. The lower income households benefit more, and those at average or higher incomes don't benefit from a GBI by its very nature. So these are, I think, two very different instruments with different policy objectives, with C-78 being a very general application. So if you buy a expensive wine, you potentially benefit from much more GST break than if you buy a bag of chips, for example.
Thank you very much. Good luck with your chip journey.
Thank you.
Merci. Moi, j'ai une question.
Thank you. I have a question about the other provinces. Mr. Giroux, you were talking about what's already in the tax collection agreements. What for Quebec? Quebec administers the GST, so there's a very different situation with regard to administration, collection. It'll create additional work for people who work for Revenu Québec. So there's a cost attached to that. There's a cost for the province. In order to change their point of sale machines, there's a cost for businesses linked to this tax relief. So I wonder whether you have calculated the cost, and I call them indirect costs, but they're almost direct costs of the policy. We have, with regard to the estimated costs for retailers and businesses or for the Quebec government, we have not estimated those because the Quebec officials are collecting the tax for the federal government, and there will likely be additional costs linked to verifying whether the products that are supposed to get tax relief for the GST but not for the provincial sales tax in Quebec have actually been properly administered. So, with regard to those costs, we haven't estimated them. So you don't know about the order of magnitude, for example? No, and really we don't have the right tools to get an idea of the costs to businesses because it's private sector. And so the other groups that were mentioned earlier are in a better position to estimate those costs. When it comes to the federal government, the additional costs linked to setting up this tax relief measure, so there are call centers, perhaps, that will have to be set up. That's what we heard yesterday. And the Canada Revenue Agency is expecting to get calls. And is not sure that there will be enough resources internally at the CRA to do that because the budget is not there. Have you looked at those additional costs linked to this policy? Answer, no, we don't have that estimate either. And we don't really have enough data or experience to estimate the cost of such the administrative costs for temporary changes like the one that we are looking at today with the call centers, perhaps. But when it comes to the flexibility that the CRA has for audits, well, if the audit is very complicated, they might have fewer audits, or they might ask for additional resources to be able to conduct the audits that they need to conduct. But I think that officials from the CRA would be in a better position to answer that question. Senator Gignac, you have a question? Yes, thank you. Welcome, Mr. Giroux. It's always a pleasure to see you. You have been following public finances for a number of years, maybe decades, and you're a tax expert. Do you know whether this is the first time that the federal government has played around with the tax base and the products that are taxed without talking to the provinces first? Because when it's a rate drop, well, that's fine, the rate drops and it affects the federal. But when you look at the tax base, that has a different effect on it has an effect on the provinces that have a harmonized sales tax and the federal government. So during the pandemic, that's a different situation. But outside of the pandemic situation, is it the first time that this happens? I mean, I'd like to know what you have to say about that. Answer, yes, it is possible. I mean, I think so, but given my great old age, maybe my memory is failing. But I think that it's the first time since the harmonized sales tax regime came into force. It's the first time this happens. So the federal government is saying that it's trying to help Canadians that had an increase in the cost of living of up to 28% in some cases, and so the federal government wants to reduce the amount that Canadians are paying. But there are distortions in the Gatineau region. We've been talking about it for a few days. And when it comes to really trying to MacGyver something tax-wise, let's say that the federal government says we're going to reduce the GST by 2% on everything rather than reducing it on a few products. It's about $4.5 billion a month, and so we're talking about $1.4 billion. If you reduce by one, it's going to cost $800 million a year. So we can see that the difference is not huge. So what would the advantage have been based on, if you look at a simple measure that would not have had the same impact on provinces, and compared to this measure that plays around with the taxable goods and has a different effect on different provinces? If you had been the advisor to the minister, what would you have opted for? Would you have chosen what the minister chose, or would you have used the other option? Answer. Well, when it comes to which approach is better, it depends on the purpose of the measure. If you are reducing the GST by 1% for 2 months, well, then that reduces the tax burden in general, and there are no particular elements that are being targeted. But if you want to target typical expenses during the holidays, well, that doesn't really work, because imagine if it were a tax break for people buying vehicles. Well, it's not linked to the holidays, so you're not really achieving the goal that you had if you were trying to give people a break during the holidays. So when you compare it to permanent changes, well, yes, it's possible for provinces to, it would have been possible for provinces to sort of take up the slack. When the GST was reduced from 7 to 5%, well, they took that tax space and they took advantage of it to increase their own provincial sales tax in order to be able to make enough tax revenue. So if I interpret what you said, I know that perhaps we're being sort of caught a little bit off guard by this measure because of the distortions that it creates and the administrative problems and the cost to businesses. But what you're saying, that if we really want to help the lowest income Canadians or lower income Canadians, this measure is better than a widespread 1% reduction in the GST. Is that am I right? No, that's not what I said, but I'm just trying to interpret it properly. No, I'm not trying to make a recommendation about which measure is preferable or better. Each measure has its own objective. What you mentioned, each option has its pros and cons, and it depends on what the public policy objective is. And I don't want to commit to any of the solutions. Yes, you do well to set me straight. Next question, Senator Moreau. I'm sorry, I made a mistake in the speaking order. Answer, no, but it's fine. You said that we have to expect a little to be flexible to a certain extent. Thank you very much. Thank you, Mr. Giroux, for being here with us. I'd like to come back to something that Senator Ross said about the compensation that is due. And so you seem to have examined the agreements between the federal government and the provinces with regard to harmonized sales tax. So I have a question about your calculation. So if the trigger here is 1%, that's fine. But when that trigger occurred, what does that lead to in compensation? Is it just for the 1%, or is it more than the 1%? If I understand the agreements properly, the compensation is for the entire amount. So there's no free ride for 1%. So if you go past the 1%, then you have to compensate for all of the losses. All right. So according to the agreements, well, Senator Ross seemed to be saying, well, the provinces have to be consulted. And yesterday, the minister said that she had spoken to everyone. We don't know whether the provinces were actually consulted or not. But if we assume that the provinces were not consulted, or that the provinces feel that they have not been consulted as established in the agreements, so do they have to actively do something to not be compensated? Do they have to waive the compensation, or does it happen automatically?
Thank you for the question. So based on our understanding of the kind of the tax agreements, they are eligible if it passes that 1%. They're eligible, and it's only if they decide to waive it that they would not receive it. So they
would have to waive it.
Yeah, there would have
to be compensated.
There would have to be, yes, based on our understanding, there would have to be kind of a formal kind of acknowledgement that they are kind of waiving that revenue which they are owed.
Okay. Et donc le montant que vous calculez est basé.
All right. So the amount that you have calculated is based on the fact that no province would have waived their right to compensation? Yes, because we haven't seen any explicit communications. Yes, there have been comments in the press. We have seen no official communication between the provinces and the federal government saying having the provinces saying that they waive the compensation to which they are entitled based on the tax collection agreements. Question. According to those agreements, can you tell the committee what the waiver should look like? Is it a decree by the Council of Ministers of the provinces? Like, what does the waiver have to look like? Answer. I think it depends on each province. I think that if the agreement is between the federal finance minister, or was at the time, and the finance minister's counterparts, well, my understanding would be that the Minister of Finance of each province would have to write a formal letter saying to the federal government, I waive the compensation to which the province would be entitled, the province being Ontario, New Brunswick, whichever province it is, under the agreement, given the change ushered in by the bill or act at the time, C-78, if it gets adopted. Question. So do the agreements name a minister who's responsible for it in each province? Are you sure that it's the finance minister in each province? So I looked at the agreement with the province of Ontario, and in Ontario's case, it is the finance minister of Ontario that represents the province as part of under the agreement. Does it require a decree in the province? Well, that depends on each province's. It's up to each province. Well, for $1 billion, I would imagine that the cabinet of the Premier of Ontario would want that money back. So given your history and background in the province of Quebec, well, yes, that's right. That could also limit the future career possibilities of a minister. Yeah, I think I'd be back on a diet of chips pretty quickly if I didn't do what I had to do. I have a question. If the federal government decides to give Ontario $1 billion to make up for its decrease in tax revenue, well, that will create other effects. It will have to come from the General Treasury, and all Canadians will be paying for the tax break that people in Ontario got. And that's in addition to the adverse effect that we heard about in the distortion, where restaurants and retailers in Gatineau might lose custom and customers to Ontario. Answer. Well, we assume that provinces have not waived their right to compensation, but it is possible that the finance minister or whichever minister is responsible within the government has had a discussion with the federal government, and that there will be a letter or an agreement that will be publicized and made official in the coming weeks. It's possible. I am just telling you what the tax collection agreements contain in terms of compensation and what the threshold would be, and the fact that those thresholds will be met under C-78. Yeah, so it would be a double negative effect then for certain provinces. Yes, according to our understanding of the bill. Question. Can you stay for another 15, 20 minutes? And would you like to have a second round? Senator Monsieur, you have a question. Yes, and it's in the general trend of questions here. Given the probability of going past the 1% threshold, and that it's probable as well that the federal government will have to pay compensation to the provinces, it would be the people in a given province who would waive compensation would not be popular with its citizens. Answer. It seems that for the 5 provinces where there is harmonized sales tax, the harmonized sales tax will be removed from the goods in the list temporarily. So it's not really a decrease for that would be equivalent to the GST, but the entire HST. So I don't think that it's a choice that's available. So no, we're talking about the 5% for provinces that are not part of the harmonized sales tax. Yes, so that's Quebec, BC, Alberta, which has no sales tax, Manitoba, Saskatchewan. As far as I know, there is no question of having those provinces remove their own sales tax, provincial sales tax. Well, what about a province like Ontario where the harmonized sales tax exists? The amount that would be given back to that province under the compensation in the bill, that would be for the harmonized sales tax and not just for the provincial sales tax? That's what we understand, and Jason can confirm it. Because as we understand it, the HST will not be applied to the goods listed in C78. So it's not just a reduction that corresponds to the federal sales tax. Question. So we're talking about 13% in those provinces, and that puts them over the 1% threshold in the tax collection agreements. Is that right? Yes, because we're talking about the revenue generated. So that means that the provinces who are not part of it could be penalizing the consumers in that province. Yes, that's right. In Quebec or in Manitoba, I mean, they have borders with Ontario. They will have a retail tax rebate of 5%, and in Ontario, for the same goods, the decrease will be 13%. And what about the 5% threshold? Well, that won't apply because they're not harmonized for the provinces where it's only 5%. So we have decided that we will have a second round. Senator Forêt, do you have another question? No? Senator Dalphond, do you have another question? Yes, I'd like to continue. For provinces where the sales tax is not harmonized, there's a political choice to make. The province could also give a tax break, a provincial sales tax break. I understand that. But for the provinces that have a harmonized sales tax, they don't have a choice. It's harmonized. It's automatic. They can't now say, I don't want to be harmonized anymore. And the trigger threshold is 1% of loss of tax revenue. So if it is a loss of tax revenue of 1.5%, they will receive the equivalent of 1.5% and not 0.5%. So if they are actually going to make a concession, well, then they are probably going to want to bet on getting compensation. So Senator Gignac asked a question about the situation of Quebec, and have you looked at the agreement between Quebec and the federal government? It goes back to 2012. It's an old agreement, but there must be a clause under which, yes, if products are added, or I mean, there must be more work attached to it because it has to be checked. And I wonder, does the federal government pay an annual amount to the province? Answer, yes. I did not look at the agreement. I haven't looked at it recently, but in my former position, I did look at it quite a bit because it was fairly complex. And the conclusion that I and my colleagues had come to is that Quebec was generously compensated for the activities that they have to perform to collect taxes. That might be a surprise to your colleagues in Quebec, but in fact, we came to the conclusion that Quebec had been well compensated for its activities to collect the GST in Quebec. I don't know whether there are mechanisms for temporary changes and whether the Quebec government should get additional compensation for the work involved in that. But I know that at the time we had seen that the Quebec government was getting compensation that probably went beyond what the federal government would have to pay to administer the GST in the province itself. So that means that Quebec had been successful in its negotiations with the federal government. Yes. Senator Lefreda, do you have another question for the second round? Very quickly. You have 2 minutes.
You see associated with the implementing the temporary tax cuts, and I don't know, you had a report where the tax burden of Canadians by 2035 will increase because of demographics, tax brackets. Is there creating expectations for future tax relief, or do you feel any other risks, or you feel it's well done in the sense of helping Canadians, temporary tax break, and in 2 months we're back to normal?
In terms of risks, I don't see a lot of big systematic risk or systemic risks. You mentioned the risk of pressure to extend. Yes, it's a possibility, but is it a big risk? I don't think so. It's circumscribed and limited to the holiday season and a couple of weeks after the holiday season, so it's limited in time. The list of products are well known and they're relatively well identified. I think there will always be some limit cases where is it a kid's toy or an adult toy, or we won't get into that here, but some admin risks and some complexities, but the risks for the fiscal risk, I think they are fairly limited given the list of eligible products is known, the duration is known, and it's in legislation. So the fiscal risks are fairly well limited, I would say.
Thank you. Merci.
Senator Mercadal, do you have a question?
Just one quick question. PEI has harmonized sales tax, so I'm just wondering what the estimate is of the reduced tax revenue in PEI.
It's in the range of about $20 million for these 2 months.
Okay, thank you.
Senator Kingston, you have a question? No. Senator Ross?
I don't have a question, but I would just like to clarify. The tax agreement doesn't talk about consultation with the provinces. It talks about prior written agreement from the province. So it's very specific that it's not just a conversation, it's written agreement in advance. I don't know how to make that into a question.
C'est correct. Monsieur Giroux, vous n'avez pas de commentaire, c'est clair? Oui, c'est bon. Thank you, Senator Ross. Very good point. Senator Moreau, avez-vous une question supplémentaire?
Senator Moreau, do you have an additional question? No? Senator Gignac, do you have another question? Thank you, Chair. Thank you once again, Mr. Giroux. You said that Quebec was generously compensated for its administrative work, but I will not, and I won't make a comment on that, because my colleague and I have ministerial experience there. But I want to make sure that Canadians and Quebecers understand what is going on here and understand it properly. In Quebec, Quebec collects the GST and administers it on behalf of the federal government. But because it is not a party to the harmonized sales tax, that means that the Quebec sales tax won't drop. But if the system in Quebec were the same as in Ontario and other provinces, given the figures that you have, they would have been eligible for compensation. So we can know. So the provincial sales tax would have gone down. So it would have been 6 to 7 million. 700 million for Quebec. It's about $1 billion for Ontario in compensation that would be due. But they're deprived of that because Quebec kept its fiscal autonomy. Because Quebec is a province that decided to keep control of administration of its sales tax and the federal sales tax. Ontario has waived its $1 billion publicly. That's fine, but the other provinces haven't. And what about the provinces that don't waive the right to compensation? They'll get the compensation. But I think that there should have been an additional clause in the agreement of 2012 because Quebec is getting a raw deal. Answer. Yes, I understand your question, but in provinces where the sales tax system is harmonized, so where the federal government is reducing the GST, well, the harmonized sales tax provinces have no say, and those who do not benefit from the harmonized sales tax are eligible for compensation. Yes, I understand, but we're not talking about the GST rate reduction. We're talking about the products, and those who are not part of the harmonized sales tax regime can get compensation, or rather, it is. So where the provinces do not have the flexibility and there is a unilateral decision on the part of the federal government, it opens the door to compensation. But in Quebec, that's not the case. And yes, and there are distortions in the capital region, the greater capital region, Gatineau and Ottawa, because people can decide not to shop in Quebec. They can shop in Ontario and benefit from the tax relief. I just wanted to make sure that people understood that. Yes, thank you. Are there other questions? No? Very good. And that puts an end to this part of the meeting. Thank you very much, Mr. Giroux and Mr. Stanton. As always, your testimony and advice has been clear and relevant. Thank you very